Hey Said, Mark, Pepo, Daniel, Zen and Dan. Great day on mRNA. 5R. That's amazing. Good job, Zen. Good to see that you're doing well, guys. 2.5 on the LTR. That's really good. Pepo also green. Well, I see that you guys did really well. I'm really happy for you all. Let's see how I can do in the afternoon. Hey, Enzo on YouTube, how are you doing? And Otto. Louis, good open range breakouts this morning. Got greedy and gave most feedback. Yeah, that's sad, but good to see that you're still green. Maybe you'll still make it back up, or you could just call it a day and start fresh tomorrow. Avi, 4.7R. Yeah, I'm happy for you guys. I think it was a really good day. So let's see how you traded here. Daniel shared with us a UAL trade. This was a parabolic reversal, I assume. Let me get the pen. I always forget it. I get everything ready, but the only thing I forget to open every time is the epic pen. So look at these guys. UAL, small. Actually, this is a good 20-minute upper range breakdown or 15-minute. Yeah, it's 15-minute upper range breakdown. Small reverse ABCD pattern on the 5-minute chart. This is the 20th minute candle, but as long as it's still within the 15-minute candle, this is a 25, right? So this is one 15-minute candle right here. Those are the wicks. This is the second 15-minute candle. This is the wick. Oh, actually, yeah, it went up. This is the wick of the 15-minute candle right there. It opened there, closed down there. No, there is no wick here, exactly. And that's the break of the previous 15-minute candle. 15. And then around 10 minutes, this candle broke down. So this was a good 15-minute open range breakdown with a reverse ABCD pattern on the 1-minute chart. It's the same thing as looking for an open range breakdown on the 5-minute chart with a reverse ABCD pattern on the 1-minute chart. So yeah, I love this pattern. This was clear, but unfortunately it didn't take it. I think Andrew traded UAL to the short side, right? Or he traded CCL. I think it was UAL. Then look at this. It's dropping down parabolically. Not so parabolic, but still you could see that it's getting extended from the 9 moving average in the 5-minute chart, going into a daily level, having climactic volume right there, which is a double of what we have in the previous 1-minute candles. We're having good 1-minute candles, bullish 1-minute candles, new high on the 1-minute chart. You take it to the long side, put your stop loss slightly below the bodies right there, and you should have been never stopped out on this one, right? Got before the stop loss, before it went against me. Okay, I see that. Yeah, this was actually really good setup. Look at this, guys. Extended from the 9 moving average on the 5-minute chart, getting into a daily level, having good confirmation 1-minute candles, having climactic volume down there, not so crazy, but still decent volume compared to what we had before, and a new high after that hammer. This is an A+ parabolic reversal. I love it so much. You take it to the long side. It eventually worked out, but unfortunately bailed on this one earlier. Can anyone here share our quick calculator, such an Excel tips? I'm not quick simple math. Luis, do you use DAS? Trading workstation. So before I had DAS Trader, I had a spreadsheet and I had multiple hotkeys. If the stop loss is 5 cents and I'm risking $50 per trade, I would take around, I forgot about that. This is, I think, around 1,000 shares. So that would be a hotkey for 1,000 shares, okay? If the stop loss is 10 cents, I would take 500 shares. If the stop loss is, let's say, 15 cents, I would take around, if I'm not wrong, 350 shares. If the stop loss is 20 cents, I would take around 250 shares. If the stop is 30 cents, it will be around 150 shares. And I used to have different hotkeys. So let's say control 1, control 2, control 3, and that's it. So basically, if the price is right here, 13.20, your stop loss is, let's say, 30, stop loss is 10 cents, you hit the hotkey for 10 cents, and it will automatically calculate 500 share size. And I think on the trading workstation or Thinkorswim, you could set those type of hotkeys, right? So yeah, that's what I used to do before. Good. It's not an easy weekend though. So yeah, just when to exit. It is really moving fast, far away from moving averages and no near levels. I always manage to get out early. So yeah, the first partial or the first exit target should be at least 2 to 1. If the stock is going so fast from the moving average and there is no daily level on your way, you are so much in the green, you made double of what you risked, you could just take some partial. If you are so patient, you could just simply hold as long as it's making lower lows and lower highs on the 1 minute chart. Just do nothing on it. Once it starts holding, you see that there is buying pressure right there, then you could take a partial or exit on your position. If it's going down with no highs but it's straightly going down into the daily level, that could also be a target. When to exit, it always depends on what the stock is doing, what the price action is telling you, but it's always not less than 2 to 1 for me at least. Daniel, let's see what you did here on JPM, and this is a reverse ABCD pattern. I think also 30 minutes per range breakdown, but let's not go that far. I think maximum I have traded is 15 minutes per range breakdown. But look at this, dropped a lot, pulled back to the 9 moving average on the 5 minute chart. I could see that it did sort of a W shape right there. We don't see the price action right there, but looking at this gap right here, this low right here, I could see that there was W shape right there, sorry, M shape right there. New 5 minute low, you got in at the pullback, which was an amazing entry right there. Stop loss above this candle or above, view up slightly, and then you partialed all the way down. So yeah, this was an amazing trade. This ad I wouldn't have done it because it just was too much, no real pullback. I mean, yes, it was close to the 9 moving average in the 5 minute chart. Yes, this looked like a pullback right here, but it's been a little bit choppy, and this is not a really huge pullback. It's been around what, 10% of the move, 15% of the move, and on a reverse ABCD patterns, I want to see at least if the stock is so weak, and this is not so weak I mean dropping like that, at least 30% pullback. Normally I would love to see at least 70 or 80% pullback all the way to the 20 moving average on the 5 minute chart in this case. However, this was an ad, this was not a new position, right? So basically you believe that it will go down, you took the chance on this one, and you risked the unrealized only, you didn't risk the realized money. The next thing, you could see that at the low of the day it had this climactic volume right here. This is a sign of reversal, right? This candle right here is a sign of reversal. This candle right here is a sign of reversal. It's coming back up. Yes, it's a reverse ABCD pattern, but it's already dropped decent amount, and you have reversal signs right there. Maybe not reversal, maybe at least a pullback. So there was a huge bid on the level 2, so you had your signs to take it to the short side. And again, yeah, this wasn't bad, considering that this was an ad. If this was a new position, I would have definitely not taken this one, but yeah, this was a perfect entry right there, and I love that you got into this one on the pullback. It's really tough to get into a position on a white candle, guys. This was a white candle right here. It was almost an engulfing on the 1 minute chart, but Daniel saw the setup on the 5 minute chart and he tried to get an entry on the 1 minute chart, which was perfect. Good job, Daniel. Does it also count as a lightning bolt pattern? This right here, Peter, would you? I don't think it's a lightning bolt. I think Peter trades a lightning bolts on of the 1 minute chart, right, Peter? You don't do that of the 5 minute chart. Let's see if Peter is here. He will let us know. But as far as I know, the lightning bolt is off the 1 minute chart, and this is not a lightning bolt because it dropped down, came back up, dropped, and this would be the lightning bolt here if it was dropping straight down. But there was an M shape, by the way, so it didn't break down. And normally this is the entry, this is the stop loss, and this would be his stop loss right here. Yeah, and I think he's not trading lightning bolts of the 5 minute chart, but that's for Peter to say. Perfect, Bitang. So let's see this one again. Whose was this trade? I just took a look at that and I forgot it. Avi. Let's see what Avi did. traded Twitter. This was a nice long. Let's see. So we had sort of a descending triangle right there, and honestly I didn't like Twitter to the long side today. I liked it more to the short side. First of all, we had a lot of bids down there on Twitter. Second thing, in the pre-market it was holding below the moving averages, it was holding below VWAP, and on the daily it actually gapped down. Looking at all those indicators there, I was so short buys on Twitter. I was looking at it, but unfortunately it gave me nothing, so I didn't trade it. And right at the open it squeezed above VWAP. It squeezed above those candles right there. You see that here it was steadily downtrending, lower highs, lower highs, lower highs, until the open it just ruined this setup right here. It broke this channel right there to the upside. You took it immediately at the breakout for momentum play to the long side and start partialing on the way up. 1 minute, 5 minute open range breakout. This 5 minute open range breakout, I wouldn't have taken it. Why? Because this was already a huge move. What's that? More than $1 move. And Twitter on the daily, if you look at it, it doesn't move a lot, right? You could see that on average the candle is around $1.5 or $2. So this was already a huge move, so I definitely wouldn't have added here or wouldn't have taken this open range breakout to the long side, especially that there was no pullbacks. But I see that it worked out for you. And then this was the last long for you, right? I think this was a long, this wasn't a short and cover. So look at this. This, I think you tried to get in off this daily level. Am I right? I think Ivy is not here. But yeah, I guess he tried to take it to the long side of this daily level. Remember what I usually said? I don't really love taking stocks into a trend continuation of daily levels, simply because those daily levels, I use them either as a confirmation to the short side when they bounce off a daily level, or I use them as targets if I'm early right there, but I never use them as support. The next thing is, this was already a huge move right there, right? This is already a huge move. Yeah, so look at this then. This was already a huge move on the 15-minute chart, a huge move on the 1-minute chart, no real pullback, right? The very next candle is closing as a doji at the high of the day, which is a reversal sign, right? Then you're having two shooting stars on the 1-minute chart, small double top. And this is actually something I love to see when I'm taking parabolic reversals. Either take it to the short side here or take it to the short side right there on a new low after small double top. Basically, so extended, small double top on the 1-minute chart, two shooting stars on the 1-minute chart, doji on the 5-minute chart. This is a reversal pattern, and instead of taking it to the long side, I would have actually considered taking it to the short side. I see that the short wouldn't have got me anywhere. This was a really small move right there. I mean, the risk to reward is there, but I would definitely look for a bigger move, especially after this whole move right there. But still, definitely wasn't a longie yet by then. Here, it looks much better for a long. If you take it to the long side right there, strong move, drop down all the way to view up, closed as a hammer, shooting star, doji. Basically, it's still indecisive. It's been consolidating for around an hour and a half. And finally, it's making an engulfing candle above the consolidation area. This would have been a good entry to the long side, but unfortunately, it just fails and breaks down. Hey, Anne. And trade W day. Partial too heavy. First partial was 50%. Second was 20, third was 50%. Stop loss a bit too wide. Could have just done below the 50 EMA on the 1-minute chart. And second entry was a free roll. And maybe could have added more at 10.57. So let's see what you did. You took this thing to the long side, went up, pulled back, looking like a 5-minute opening range breakout. 1, 2, 3, 4, 5, 6, 7. This is the 7th minute, so still 5-minute open range breakout on an ABCD pattern on the 1-minute chart. The 2-minute chart isn't looking so bad, 2 dojis, and then it's making new highs. Stop loss below there. This was a really good stop loss. I don't think this was so wide. I wouldn't have tightened this thing. I mean, yeah, below this 1-minute candle, it was perfect. You could have used the 1-minute wick right here, but it's risky to put your stop loss at the wick of the same candle because it could just drop down a little bit more. I do that sometimes. I put my stop loss below the wick. When this candle is red and it goes from red to green, I sometimes take a position if I believe that this is the breakout area, and I put my stop loss right below the wick of the candle once it turns from red to green. But that's a little bit risky. I get subbed out more often. When it works out, I get a really good risk to reward. But still, this is risky. This was a perfect stop loss. I don't think this was so wide. First partial was 50%. And yes, this I would have taken a partial right there as well, to be honest. I mean, if it was the risk to reward, I would take a partial right there. Why is that? You are having a shooting star at the high of the day. And remember what I told you guys? I usually don't love going into ABCD patterns against a shooting star or a reverse ABCD pattern against a previous hammer. It's just tough. Sometimes they don't make it, sometimes they make a double bottom and then they work out. Here you had an ABCD pattern along with a 5-minute open range breakout above all the moving average. So this was really good. I love this setup. Yes, we only had this against us. Other than that, everything was in our favor. So yes, this was a good long. This partial, I also would have taken this partial. This partial was at a daily level, which was smart. This partial was really unnecessary, right? Yes, it made a new 1-minute low, but basically it just broke out. The breakout happened, and the breakout was all the way to a daily level. It bounced off that daily level, which is normal, right? When a stock hits a resistance area, people start taking partials. Shorts try to take control out of that. Sometimes they do take control and you could exit at break even, but more often, if everything is showing you that this is a long, this is just simply a pullback. And if this was a small position, this was a 50% actually, this wasn't small, this was huge, right? You could have taken just simply a partial instead of getting all out and just hold to see what's going to happen. Now here I would have been concerned. Right here I might have got out around 80% of my remaining position, 70% of my remaining position. And guys, can you tell me why this wasn't that scary and this would have made me concerned? I bet some of you already know that. Shooting star and a fake breakout. Exactly, Hannah. Yes, then. That's it. Two signs will make me concerned. First of all, this was strong. I like it. This I wouldn't care about. This might be just a pullback after a breakout of a daily level. So this is totally fine to see. This is a breakout. Amazing. I love to see that. And the next target we have is right here. It's not strong enough to get to this daily target. It just did a fake breakout. This is not strong breakout, right? It's just small breakout. Like, it's almost nothing. If it was strong, it would have continued going higher. But this was literally nothing. Just small breakout. And then it got sold off, closing as a shooting star. This is a fake breakout. And this is where people are starting to get short. This, if I was watching this 100%, I would have taken this to the short side, because this is one of my A+ parabolic reversals when they are extended from the 9 moving average on the 1-minute chart. And look at these guys. It is extended from the 9 moving average on the 5-minute chart right here. That was there, 185, right? Fake breakout right there. Shooting star on the 1-minute chart. New 1-minute low. Perfect. Setup to the short side. Now this, if you took that partial right here, I would totally agree with you. Now this long, I wouldn't have taken it. Why is that? The breakout happened, but the stock got back into the range. This is a weak sign. After shooting star and 2 candles dropped, I would expect it to do a second top lower than the first one. Then you'll have a head and shoulder setup, and I would be afraid that it will continue dropping down. So basically, before I get interested in taking this thing to the long side, I want to make sure that the head and shoulder setup is broken right there, right? So this was the first shoulder, this was the head, right? It's a fake breakout right there. You take this thing to the short side right here, then it drops down. Perfect, I see that. Now it's forming the shoulder, and this is where I'm interested in it. Is it going to make a lower high, which is the second shoulder, and then drop down? Or it's going to start dropping down, break that pattern, and continue going up, right? Once the head and shoulder setup is broken, I would be interested in taking this thing to the long side. So this was the perfect entry, in my opinion, to take it to the long side. Yes, this could have worked out, and this actually worked out right here, but better wait for more confirmation, right? We don't want to go against the setup which is forming, especially after fake breakout and after the stock is getting back down into the range. Hello, Girish. Arthur, let's see what's there. Arthur traded Twitter right there. And let's see what you did there. Was this short and then a short and stop out and then a short and partials? I actually can't figure out what happened right there. Let's see. I think these were shorts. Decrease the positions and a partial and then a long and stop out. There is a 5-minute chart on the side. Okay, perfect. I didn't see that. Sorry. Yeah, let's better look at this from the 5-minute chart. Let me zoom it in, get it down right there, and that's it. Stock going up so long. You took it to the... What was the sign which made you take it to the short side right there? It's totally fine, Arthur. Did you trade it off the 5-minute chart or off the 1-minute chart? Because if it was off the 1-minute chart, I would see something there. But of the 5-minute chart, what made you take to the short side right there? The 5-minute. Okay. Were there any signs bid or usual on the ask or it stalled right there? You think it was volume? 1, 2, 3, 4, 5, and then this just started. So it was extended. You saw something on the volume. I can't see anything on the volume, but let's say it was lighter on the uptrend. I mean, this is normal volume, I could say. It's a doji right here. It's breaking out with no increasing volume. And the selling volume, we can't judge it by the selling volume because on this candle it was still low right there, right? And it was extended of the non-moving average in the 5-minute chart. Maybe it stalled right there. You took it to the short side, added to your position, took cover or a partial, and exited the rest at break even. I saw some signs to take it to the short side on the 1-minute chart, and we went through this one, guys, on the first review. So yes, it was a good short right there, and I would have been interested in shorting it right there. But definitely of the 1-minute chart to the 5-minute chart, I can't really tell. But you trade more often of the 5-minute chart, and you saw of the 5-minute chart the same thing I saw there on the 1-minute chart, so I wouldn't say this was bad right there. The long though, I'm not sure I would have taken it, right? This is a parabolic pullback, forced pullback to the downside. First high right there, we would wait for a W shape, and this is not a great W shape, it's just a little bit weaker right there, but still this wouldn't have been a bad entry right there to the long side. One thing I would be afraid about is going into a moving average which is sloping down, but yeah, this was a little bit early, I think. And bad trend long. No, I mean, that's totally fine. So basically, just be careful when taking things to the long side. Don't take them on the first leg up. It's just a little bit risky, especially after a huge drop, and especially after they made a huge move like this, a parabolic move. And you have also a resistance in your head, right? So basically dropped a lot, and now you need confirmation. You need to make sure that this thing is going to be long. You need to make sure that it's not going to do a reverse ABCD pattern and continue dropping down, right? Because market isn't going straight down or straight up. It's either going up in waves, then it starts dropping down. Let me do it here. Going up in waves, then it starts dropping down, and it could do one of the two things, right? It could do an ABCD pattern and go to the long side, or it could simply do a small pullback, which is a reverse ABCD pattern, and start trending down, right? All those legs up aren't necessary second leg up, right? All those waves aren't necessarily second leg up. You need to make sure that this is a second leg up, and to make sure of that, you need to wait for the second wave. The second wave is going to determine whether it's short or it's long. If it's making new lows, like what happened right here, I'd be a little bit more short bias on this thing. Lower high, you see this? 1, 2, 3. I'll be definitely more short biased, but I don't like going against bunch of moving average, especially when they are so far from each other. If the stock consolidates for a long time and those moving averages get closer to each other, they start to cross on this, they'll start to cross on the 1-minute chart, the 9, the 20, with the 50. I'll see reversal signs on the moving averages. I'll see that it's been a long consolidation right there. It's waving to the downside, and I'll be considering taking it to the short side. If it's consolidating or doing lower high waves, but against moving average which are so far from each other, so wide from each other, then I'm definitely not going against these type of moving averages. Why is that? Because it could break the 9 and go to the 20, right? It could break the 20 and go to the 50. I'm not sure if the risk to reward will be there or if it's going to be worth it. So yes, at this point, I'll be interested only in the long. Looking at the moving average, I'm only interested in a long position, but I'm not taking it to the long unless I get the confirmation, which is wave to the long side. That's not necessarily Suyash, but it's normally it depends on where the bid is. If you're having a bid right on your way right here, okay, a wall, let's say the price action is trading right here, okay, and you're having 50,000 bids right here, okay, and on the ask, let's say you're having 10,000, right? So you're having a buyer of 50,000 and you're having a seller of 10,000, right? And this is a wall right here. The price is trying to go down and there are more buyers than sellers, and the price couldn't get pushed lower. This is acting as a wall, and most likely that it's going to bounce of this level. If the price is trading right here but the bid is down there, a big bid is down there, then this might indicate that the stock is actually weak and it might get into or to that bid right there. Why is that? Because that guy right there, he's not sitting down there for nothing, right? He is a big player and the price is trading right here. His order is down there. He doesn't care about increasing his bid. So that's a bearish sign. Mark, let's see what you did there. Set up spinning top on the 5-minute chart, the descending triangle on the 1-minute chart, stop loss 99.40. Trade management, early first partial due to the volatility and spread. Okay, exit could have held to at least 50 SMA on the 1-minute chart. So let's see what we have there. Stock is extended from the 9 moving average on the 5-minute chart, right? And I love that for reversals. Now you're having, not on the 1-minute chart, but on the 5-minute chart, 2 dojis or a spinning top. You're having a new 5-minute low. You're having a lower high on the 2-minute chart, or sort of small descending triangle on the 1-minute chart as confirmation. You take it to the short side, put your stop loss right here above this wave right there, right? And take partials all the way down. So yes, this was good, and I would also take a partial to the 50 moving average, at the 50 moving average on the 1-minute chart. Where is the 50 on the 1, 50 on the 1? Oh, that's it. So yeah, you took a little bit of an early partial. This wasn't even a 1-to-1, I guess, and you are getting into a reversal pattern, right? And into also a breakout pattern, which is a descending triangle. So we should expect that if this setup works out, it would break this area. It's not bad to take partial right here if you got your 2-to-1, or you got your 1-to-1 and your rule is telling you to partial at 1-to-1. But if your rule is telling you to partial at 2-to-1 and you are seeing this, I think it would be better to try and hold for the breakout. Partial at the 50 moving average on the 1-minute chart, that's smart, because if stock is really strong and if it's trending, normally it would bounce of this 50 moving average and continue uptrending. And usually the 50 moving average on the 1-minute chart coincides with the 9 moving average on the 5-minute chart. Here it was a little bit below it, but usually they are coinciding with each other. So yes, this would have been, or this was actually a smart area to partial, and this was a little bit earlier right there. Looking at this, yes, it was extended from the 9 on the 2, extended from the 9 on the 1-minute chart, extended from the 9 moving average on the 5-minute chart. But looking at those candles, I wouldn't have coded this one for a parabolic reversal at a new 2-minute low. Why is that? Because we are having buying pressure wicks on the 2-minute chart, buying pressure wicks on the 2-minute chart, right? Buying pressure right there. And when I go for parabolic reversals, I want to see it other way around. I want to see the selling pressure on the top, then a new 2-minute low. So if those wicks are on the top, were on the top, that wasn't right there, and then it did a new 2-minute low, that would have been a perfect entry to take it to the short side. But looking at those candles, 100% I would have missed the short right there, and this was actually a good place to re-enter right there, or to take an entry. So good job, Mark. Let's see your trade on mRNA. Trade 1, view a play, long, lost patience with it, would have been a nice trade and never hit your stop. Trade 2, attempted a reversal but didn't wait for signals, which was a bad trade. Trade 3, good reversal, extended from the moving average, bearish pins on the 1-minute chart and ascending volume bars. Now let's see what you did right there. First trade, you took it to the long side, right? And look at these guys, you see? This was a little bit early. It's really tough to get into the long side after a parabolic drop on the first leg up, because usually they do this lower high, second lower high, and sometimes they could break down. But if the stock is really strong, after this drop right here, it will do a W shape to the long side, and this is a good entry to the long side, right? I see why you took it to the long side. It was really strong right there on the 5-minute chart. It pulled back to view up on the 2-minute chart. You had ham right there for a confirmation, and you took it to the long side. Not even the second candle, you took it on the third candle. Normally in this case, at least I would wait for a new 5-minute high, but what I usually do is I wait for this W shape, because on these places I usually get subbed out, similar to what happened to you. You take it to the long side, you put your stop loss, you take your partial, then it does the lower high wave, gets me subbed out, and it either fails and I'm happy that I got subbed out, or it works out and I'm mad that I got subbed out. But there is nothing to do. If stock gets into your break even, you should respect your rules and you should exit at break even, right? And that's why always on ABCD patterns, wait for the W shape. And if I get subbed out right there, I know that if a stock is strong and if it's dropping parabolically, it's usually doing this W shape. And even if I take it here and I get subbed out, I would re-enter right there after a W shape confirmation. Now it's going up right there. You take it to the short side on a new 1-minute low, but this wasn't the perfect parabolic reversal. Why is that? Remember, we need to see at least one on the 1-minute chart, a shooting star. That's not enough, but at least that. Better to see 2 good looking 1-minute candles, or let's say 2 dojis, or 1 good looking 2-minute candle. This is 1 minute, 1 minute, 1 minute, 1 minute, or 2 minute. These are the candles I want to see on a parabolic reversal. And here, what do we have? Let me zoom it in. Here we're having just a candle with no wicks, right? A bullish candle on a wick before. So basically this is not a weak candle to go against or to go to the short side. You took it to the short side, no confirmation. The 2-minute chart is so bullish, it did the 3-bar play right there, and you got subbed out on this one. But look at these guys now. You see this? Extended from the 9-moving average on the 5-minute chart. 2 good looking 1-minute candles right there. Almost 2 shooting stars. You take it to the short side on the next candle, and then the target is the 9-moving average on the 5-minute chart if you can hold it. If not, just partial all the way down. This short I wouldn't have done, or this ad right there I also wouldn't have done it right there. And why is that, guys? It's dropping down, there is an ad right there, and if you would have added, guys, here, let me know why you would add. If not, let us know why this wasn't the greatest ad right there. I'm glad it worked out, and I see it worked out for you, but I'm afraid that more likely this could fail. Hitting the moving average. Yes, this is one of the major things I would be afraid about. Hitting the moving average. And another thing, the second thing is that it was just simply going straight down with no pullbacks, right? This is already a huge move. This is a $3 or $2 move. Extended on the 1-minute chart, should have waited for retracement. That's it, also Mark. Exactly. So you see, guys, first of all, on parabolic reversals, what's our target? Our main target is the 9 moving average on the 5-minute chart. because if the stock is really strong and if it is willing to continue uptrending, most of the time it will be bouncing off the 9 moving average in the 5-minute chart after parabolic reversal, do the W shape, and then continue the uptrend. If it's weak, yes, it will break it, but still it will do sort of a bounce of the 9 moving average on the 5-minute chart, which it did. It did it right there. Where is it? Broke it slightly, but still it did the bounce, right? The problem is it's not always hitting the 9 moving average in the 5-minute chart. Sometimes it's getting closer to the 9, sometimes it's hitting the 9, sometimes it's breaking it a little bit lower. What I love to do is taking the partial a little bit below before it hits the 9 on the 5 in case it just bounces out of it. So in this setup, the target is the 9 on the 5. You got a really good short. It's going into the 9 on the 5, then just start thinking about taking partials. If you want to add into the position, make sure to add after pullbacks, right? Stock is dropping on the 1-minute chart, literally no pullbacks right there, and after a drop or after a huge drop, people will start taking partials at one moment or another, either a daily level, either a pivot point, either a moving average or a strong moving average. Anyway, people will start taking partials at any level right there. So it's dropping down, and that's the pullback. This is where now you are start considering, thinking about your next move. Is it going to do the W shape and uptrend and you take your position to the long side, or just exit the rest of your position, or it's going to fail the W shape and it is going to drop down, where you could simply add to your position, and then the previous support acts as a resistance. And unfortunately it's not weak enough to drop down. This would be a good sign to just bail on the position. Yes, exactly. It already did multiple candles to the downside. No pullbacks right there, right? So we usually, when we add, we should add on places where we would enter trade if we weren't in a position. So if I missed this short right there and I didn't get an entry right here, I'd definitely not get an entry here or here, right? I would maybe take it here or here, right? On the second leg down. Why wouldn't I take my entry right here? Because it could simply bounce at any moment. It could simply do a pullback at any moment. We are not sure when is it going to do that pullback, and it could just simply work out and continue going lower all the way to view up. The problem is we don't know what's going to happen, and just to be safer, always get into a position or add into position after pullbacks. But still, this was a really good trade right there. I think you made all of the losses, right? I mean, you actually had only one loss right there. So yeah, this was amazing. 2 out of 3 trades. Arthur, and then we have Henry. Arthur traded AMD. You took to the long side there, partial, and then long side, and you exited. So this is the 5-minute chart, this 15-minute chart. So look at this again. What's this? 1, 2, 3, right? And remember on our previous trade review session, 1, 2, 3. Third continuous candle to get into a position is usually so late, because after the third candle, a lot of times the stock is just simply starts retracing. Sometimes it works, but even the second candle, I wouldn't have taken it here because the first candle was so huge, right? The second candle is so huge. Now this is already a chase. This was like so late, right? Second trade right there. Now look at this. This is a parabolic drop, right? So huge drop right there. I wouldn't really be interested in taking it to the long side right here. Some exceptions maybe, which is a hammer down there. I might consider taking it to the long side, but I'm not sure I would have taken it. I would just wait for another stock to do something more clear. It's making a huge move right there, dropping down, doing the W shape, but this is not a perfect W shape. The stock is just making huge moves, right? This is not a decent pullback. Yes, we are having a W shape, but again, this is a huge move right there. It is wiki, which is not bad. Below it, and the last thing is, even if you want to take this thing to the long side and you are willing to risk it, at least we should try to get an early entry, right? Why wasn't this the perfect entry right there? You got in literally into the face of resistance, into the face of the high of the day, right? And remember, what's forming right now? A double top, right? So if here people will start thinking about shorting it, they will not short it immediately right here at the high of the day, because the stock is going up, dropping down, coming back up. Now this is not a double top, right? Yes, it is getting into the previous top right here, but this is still not a double top. We should not short a stock when it forms a double top or when it touches the previous top, only because now it's looking like a double top. This is still not a confirmation to take it to the short side. But it's forming a double top. This is definitely telling me not to take it to the long side against the previous top, because it could simply form a second top right there. What's my confirmation? My confirmation is when the stock starts dropping, when it literally resists the previous top right there, when it starts making the new lows right there or right there, that would be my short, just to go for a double top setup to the short side. If I'm really long biased and I want to take this thing to the long side, then I need to get into the long side as close as possible to the support, so that the previous top could be my target, so that I could take a partial just in case it does a double top and then breaks out. This is similar to what we did or what we discussed on the first trade review. Stock went up, dropped down, did a second leg up, started dropping down, and started coming back up. Why wouldn't we take it to the long side right here? Because now it's forming a head and shoulders setup. This is still not head and shoulders. We are still not taking it to the short side here because it's forming a head and shoulders. We need to make sure that this is a head and shoulders step. Once it starts dropping down, we either take it to the short side. If there is a bunch of support right there, if the moving averages are still so wide from each other and we don't like, this is not a perfect head and shoulders setup, we should wait for this setup to get broken. We don't take it to the long there. We wait for the head and shoulders step to get broken. It either is going to get broken right here, or it's going to continue going up and it will get broken right here. So you always try to pre-see a setup. Just try to put many choices in advance. This is forming right now that setup. If it's not going there, it could form something else. I wouldn't like it if it starts forming this against me, right? And once you get into all the probabilities, if you see that those probabilities are in your favor, just take the step. If not, just avoid it and continue watching it. It's okay to miss a few moves. It's okay to let the stock which is not perfect go without you, but it's much better than losing on a stock which wasn't perfect. If you make money on not perfect step, you'll be happy. It was a risky trade, but you made money on it. But if you lose on this setup and you knew you shouldn't have taken it and you knew that this wasn't perfect, then you might be a little bit mad at yourself, right? Good job, Arthur. So Henry, let's see what you did there. Henry traded again. Did we have this stock on our gappers list, Henry? Was this a break of a pre-market level right there? I could see a break of the 30-minute chart, a break of on the 15-minute chart, on the 60-minute chart, on a stock which actually gapped up. So basically, bullish on the daily, bullish on the 30-minute chart, bullish on the 15-minute chart, on the 60-minute chart, and as usual, I bet your stop loss is around 10 or 15 cents. This is what Henry usually does. And again, I will bet that his entry, 10 cents, was after this week. Once it went from red to green, once it broke the 15-minute chart, broke the 30-minute chart, broke the 60-minute chart, he took his entry right there and just partialed all the way to 1970. And look at this, guys, an entry at 19, stop loss of 10 cents, and a move all the way to 75. After the average, after those partials, I bet you got at least 4 R trade in this one, right? Looking at this partial right there, it depends on how much he partial right there. If this was a 50% partial, then maybe yes, it was smaller. But if these were 30, 30, 30, 30, 30, then it should be at least 4. 3 R's. Still a decent trade. Good job, Henry. Do you usually trade those type of stocks with the direction of the gap? If the stock gapped down and you saw a setup to the long side, would you take it to the long or you would just eliminate it? So yes, you basically you would not trade it. And look at this, guys. This is actually not bad. He wants to have a harmonious chart. He wants to have all the time frames in his favor. And look, this is what we are talking about, probabilities, right? He's not using the 1 minute chart, not using the 2, not using the 5. And sometimes I don't even see the 15 in his charts. He's using the bigger time frames, and he wants to see a harmonious chart. He wants to see an uptrend in all the time frames, 15 minute, 30 minute, 60 minute, the daily. And once he has the breakout on all the time frames, then he would take the position. This is amazing. He wants the probability to be in his favor on all the time frames he's watching. So if he sees all this right here, but this actually gap down, he would not take it, because one chart isn't meeting his criterias. And I love that discipline, and I see that this is working really good for you. Henry, do you take trades every day? Was there a day where you was watching something and it didn't simply give you a setup? Do you have these type of days? Or you could find a trade every day? Every day, maybe 3-4. That's actually amazing. Look at these guys. Bigger time frames. He has to be more patient about it because he's watching. Minimum time frame is the 15-minute chart. So sometimes I bet he needs to wait for a couple of hours before he takes trade. He takes 3-4 trades a day, but definitely he needs a lot of patience for that. Using the 1 minute chart, the 5-minute chart, you could get into scalps, you could get into small moves right there. You don't need to be so patient. You could find a setup each 30 minutes maybe, but with the bigger time frames, you definitely need to be more patient. And yeah, good job there, Henry. So let's see what Zen did there. Zen traded Twitter, and I see that you tried to take it to the short side there, right? For a parabolic reversal. And to be honest, Zen, I also was looking at this thing to the short side right here. This right here on Twitter, this moment, I was literally looking it to the short side, but I didn't actually take it to the short side. Why is that? Horizontal moving average on my way. And remember, I told you about those parabolic reversals. I usually try to avoid taking a parabolic reversal against a horizontal moving average. So it looked weak. I was really about to hit the trigger, especially that I saw 1 week here, I saw another week, and the third candle at which you took the trade at, unfortunately guys, you can't see it because of the triangles, but it also weaked from the upside. You had double shooting stars on the 1 minute chart, and I was literally about to shorten this candle, but thankfully it actually ripped higher and it stopped me out from taking it to the short side. But yeah, one of my rules is avoid shorting stocks against horizontal moving averages right there. This was amazing. This is perfect, and we talked about it, guys. Remember, shooting star at the high of the day, another shooting star at the high of the day, small double top on the 1 minute chart, strong resistance on the 5 minute chart, nothing on the volume unfortunately, but you have a lot of indicators in your favor, right? Moving average in the 5 minute chart, double top on the 1 minute chart, 2 dojis, extended from the non-moving average on the 5 minute chart. You take it to the short side, put your stop loss slightly above the wicks, and that was good. Took a partial right there, the rest had break even, and then you re-entered right there. Was there a reverse hammer? Short above level and the reverse hammer. I can't see the reverse hammer right there. I think there was a reverse hammer, that candles which is that candle which is being covered, but yeah, still not bad. Double top, second top lower than the first one. You see that it's failing on the 5 minute chart. You take it to the short side again, but yeah, it's not so great and starts going against you, so you just exit the rest right there, right before the second entry. Okay, I see that. So yeah guys, this was a perfect setup, great one, if this moving average wasn't there. This was an amazing one, I love it. Unfortunately, I wasn't so patient to wait till 10 o'clock. Yesterday I had max loss day. I traded so bad, I'm not hiding it. I had 7 losers, broke a lot of my rules, had only 2 winners. The 2 winners were great. I had around 2 R's on both my winners, but then I had 7 losers, each of 1 hour, and basically I ended up down 3 hours for the day. So yeah, it was a horrible day for me, like really horrible. So today I was a little bit nervous and I avoided trading. Hopefully later we'll see what's happening. I mean, that was me yesterday. Yeah, Chris, that happens. Me too. On Twitter I was looking to short but waited for the break of the range. Enzo, I hope you did have a good trade right there. Daniel, hey, my review mRNA looks like it is going up right now. Let's take a look at mRNA quickly before we continue. Maybe it's forming some setup we can catch right now. mRNA. No, I don't really like mRNA to the long side right now. And look at these guys. Strong move to the upside, extended from the 9-moving average on the 5-minute chart. Not sure if it gave you a good candles right there on the 2-minute chart. Let's see if it gave it. Not the best candle right there. It's actually, yeah, not the best candle right there. What's that? Around 40 cents stop loss. Entry 58.50, 58.30, target 57.17. Around 3 hours. I don't really like the risk to reward there. What was on the 1-minute chart by that moment? 1040. Yeah, on the 1-minute chart it's better. So look at these guys. Extended from the 9-moving average in the 5-minute chart. Two perfect, good looking 1-minute candles. You take it to the short side at 58.80. Put your stop loss at 56 maximum. Sorry, 59 maximum. I would usually tighten my stop loss a little bit above the bodies. Now you're having 20 cents stop loss. Target at 57.20. And now you're having around 4. Yeah, you're having around 8-hour trade if it works out. So this was actually amazing right there. But now, right here, since you on American, can I share my trade on that? Yeah, Luis, you could send it on the off topic and we'll take a look at that one. And then look at this second top lower than the first one. It's dropping down. Now it's making higher low waves. I like to see that. But on the 1-minute chart, it's breaking those waves and getting back into the range. I see that it's holding above the 50-moving average. Definitely a little bit more long biased than short on it. Above 57, yes, it could be interesting, but what would be your stop loss? I don't want to have 50 cents stop loss, right? If it goes directly above 57 and breaks it, and you take it to the long side, this would be sort of chase, 50 cents stop loss. If it continues doing what it's doing right now, and it will get tighter and tighter and tighter and tighter in range below 57, and it will give me around 30 cents stop loss with the wave as stop loss, then yes, that's good. So if it goes now directly above 57, I'm not taking it to the short side. If it goes, let's say, to 56.90, drops down to 56, let's say 75, comes back and breaks 57, I could take it above 57 to the long side and put my stop loss below the level it bounced off. But now if it breaks it, this would be our stop loss, and that's too much for a stop loss, right? Eric, my max loss for the day is 3 hours. So let's see, Sheldon, what you did right there. Sheldon traded DLTR, falling angel, big volume, long after view up showed support on the 5-minute chart, which is here on left. Should have entered on break of the doji body. First exit, push up in range, measured move up, trailed 1/4 position, and you get stopped out. I usually don't do trailed stop outs because when the market is volatile, it could just simply wick up or wick down and get me stopped out. Trail stop outs are good when a stock is clearly trending like with a steady pullbacks and trends, something like this. So in this case, trailed stop losses will be good. When the stock is trading like this, it has those weeks, then it has those weeks, then it's dropping down. I usually don't love trailed stop loss. I never actually use them. This was sort of channeling right there, right? It did the fake breakout on this candle, then it dropped down, closed this doji. So we had a fake breakout and we had a fake breakdown. I don't really love to see what it's doing right there, but definitely more long bias than short bias looking at how it's trending right there. Little bit late entry earlier would have been better, but I still wouldn't have taken this one, I think, but it wasn't bad. Not A+, but still a decent setup. Good partials right there, and and good exit after it formed a double top right there. Cody, let's see what you did there. You're welcome, Sheldon. Cody traded C to the long side. Not bad. Not bad for one thing. I mean, for a parabolic reversal, this wasn't good because it was close to the 9-moving average in the 5-minute chart. What's good is that you didn't take it to the long side when it was hugging the 9 on the 5. You could always exit if it bounces out of it. What I like about this setup is the fake breakdown. You could see clearly that it was dropping down, pulling back, dropping down, forming sort of a descending triangle on the 5-minute chart, breaking the low of the consolidation right there. But after the breakout, it didn't sell off. It didn't sell off to the next daily level we have right there, right? This was just a small fake breakdown right there. Closed as a doji, double bottom with the second bottom higher than the first one. You take it to the long side, put your stop loss below the blue line. I would put it a little bit below the red candle on the 5-minute chart. At least this is just a little bit risky because it could wick slightly below, but still not bad. It almost got you stopped out. Seems like your stop loss was not bad. You can see that it bounced multiple times right there. It bounced right here. Still not the worst stop loss. Took it to the long side, got your risk to reward, and exited all right there. So yeah, this is not bad. Not for parabolic reversal, but just for us a failed setup or a fake breakdown setup. The 15-minute chart looks amazing. Hammer on the 15-minute chart after a huge downtrend right there and a new 15-minute high. So yeah, this was decent. Yeah, code, this wasn't bad again. I see this fake breakdown and I love to see engulfings at fake breakdowns. You see a huge drop on the red candle, then it gets engulfed. Huge drop on the red candle, then it gets engulfed. And then once it gets back into the range, it's not a bad entry to the long side. And yeah, your entry was decent. Definitely better to get it a little bit inside the range when it's consolidating. A little bit late, but still not bad. I like how you managed it. I like how you held it through this pullback right there. You didn't care about it. It didn't get you scared. You didn't partial only because it's dropping down. You respected your rules. You hit your reward and then you exited. So yeah, that was smart and I love it. And Luis, let's see what you did on mRNA. And this is our last trade, guys. You took this thing to the long side at 56.90, exactly where the line is. So you took it to the long side on the red candle, right? This was your entry right here on the red candle. I wouldn't have taken it to the long side at 56.90 on this candle. Why is that? It looks to me that it's starting to get toppy. It's breaking out, fake breakout. 2 dojis on the top and it's making a new low, right? And you took it to the long side on that new low right there. We try to avoid taking entries at new lows. Now right here after the breakdown on the range, you're having engulfings, and I love engulfings on fake breakdowns. This is a fake breakdown right here, and then it's making a new high. So if the entry was here, this would have been decent, but right here on the way down, it just was a little bit risky right there. Then you look at this here, it closed as a hammer. If you take the entry after the hammer, after those 2 engulfing candles right there, it would have been much more safer, I think. But other than that, it was good. You managed it and you partial on the way up. Did you get the 2 R's out of it? Yeah, the volume is good, but remember, green volume doesn't mean that this is buying volume. Green volume means that the candle closed green. But inside it, you're having a lot of buying and selling. It could close as huge green candle right there, volume, on a small white doji candle. This doesn't mean that there was a lot of buyers right there. It's green only because the candle closed green, but there were a lot of buyers and sellers inside this candle. Two and a half R, that's amazing. So yeah, that's it, guys. Do you have any questions? Daniel, you're trying mRNA to the long side at 56.58. So yeah, if you took it to the long side down here, this is not so bad. You could see that it's respecting this moving average. It's wicking every time a little bit below it. After the confirmation candle on the 1 minute chart, you take it to the long side right there. Stop loss, just put it a little bit down. Give it more room. Don't put it literally below the moving average, since you see that it was wicking every now and then below it. And then just wait for the breakout. If you got a good entry at 56, 58 and then it breaks at 56, 70, you could add to your position. Your average will be around 56, 70, which is not bad as a stop loss. If it breaks out, it shouldn't come back down into the range. I mean, if it's strong. I missed Gann trades then. Let me check that. No, I actually went through it then. I just took through your 2 trades, then I went through Henry's trade. Whoa. Where are moving averages at different value in 1 minute chart and the 5 minute chart? Shuita, I use the same moving averages on all the time frames. 9 and 20 EMA. 50 and 200 SMA on all the time frames. You're welcome, Daniel, and you are welcome, everyone. Have a good day. Don't overtrade. If you have any questions, if you have any trades you didn't want to post here, because I do get some emails sometimes with some trades, some members just don't want to share the losing trades if they are so bad. Feel free to email them to me. I could take a look at them. I'm always happy to talk through that. Sometimes we all could have bad days which we don't want to share, but it's normal. None of us here having green days every day. We could have really bad days and we need to talk through it. We need to talk with someone about that. I'm getting those emails sometimes. Feel free to share that with me. I'll try to support you. I'm not going to make your day green, right? I'm not going to bring your money back, but it's really good to have someone to talk to when you're not having a really great day. I mean, in the 1 minute and the 5 minute chart, moving averages for 57. Are they different, the values for the 50 SMA and the 1 and on the 2? Let me see that. Study config 50 average number, close, offset. No, they're actually the same. Oh my god, that's horrible. Let us put it like this. Alright guys, so have a good day everyone, and